What is going on with Bitcoin Gold and Bitcoin Cash? First it was Bitcoin SV, then it was Ethereum Classic, now Bitcoin Gold and Bitcoin Cash. What's happening here? Parts of that speculation might simply just be narrative driven, right? When Bitcoin SV goes up, when the Bitcoin forks start to go up, then other classical forks also go up. Another part of that speculation could be related to the ETF approval, because the assets that are most likely to get approved for an ETF do not have an active team working on them, but they simply just have a very commodity-like broad adoption. Now here's where this all started. Bitcoin SV on the 27th of December, suddenly out of the blue shooting up. We then got Ethereum Classic, that was yesterday, and now we've got Bitcoin Gold and Bitcoin Cash. We have run through all the Bitcoin forks. Let me show you some data that you probably haven't looked at in that much detail yet. This is Bitcoin SV relative to Bitcoin. So yes, Bitcoin SV underperformed Bitcoin massively by more than 90%. But in the last 2 years, roughly, we simply just went sideways. We didn't lose net versus Bitcoin. Have a look at Ethereum Classic long term. It also underperformed more than 84%, but it also went sideways since October of 2020. No additional losses. Bitcoin Cash relative to Bitcoin, it does not necessarily look like an asset you want to get in, minus 96%. But again, in the last 1.5 years or so, the asset kept pace with Bitcoin. Here's Bitcoin Gold, the worst of the bunch, went down by 98%, but again, no additional losses since middle of 2020. Isn't that fascinating? Shouldn't Bitcoin be outperforming all of those Bitcoin forks, given that there's so much speculation around an ETF approval, which now happened, given that there's so much speculation around institutional adoption, people putting this on their balance sheet, hedge funds buying it, family offices buying it? Why can those apparently inferior assets keep pace with Bitcoin in the last 2 to 3 years? I think a lot of this is driven by speculation and by liquidity. Those forks are even less liquid than Bitcoin itself. So the same kind of dollar amount going into the asset might appreciate the asset by much, much more. So as long as the people that already made a 98% loss on the asset aren't selling it anymore because they think that money isn't really worth it anyways, as long as there's no additional sell pressure, the people that are getting in again can move the price quite a bit. Now those assets only tend to outperform in a bull market, because in a bull market people are looking for opportunity. People in a bull market want to see what's a small cap cryptocurrency that can potentially do another 10x. Especially if you made profit with Bitcoin, with the rally from 15K to 45K, and you're now looking for the next rotation, you tend to get something smaller in market cap. So this is a very typical behavior for any bull run. First, people dollar cost average into Bitcoin during the bear market, right? Because they can hold Bitcoin over the long term. Bitcoin will recover. Once Bitcoin has recovered, that gain, the potential profits, they move over to something more risky. Before we had a massive rotation to Ethereum happening, this is not so much the case now. Now we directly see the rotation from Bitcoin to the altcoins. Be careful though, a lot of those forks are held by the centralized exchanges and they might at least short-term manipulate the price. So do not trade this very short-term. Do not just speculate on this, especially with leverage, because then the centralized exchange is likely going to liquidate you. If enough people bet on rising prices, then they can dump the price and collect the liquidation fee. Do not fall victim for that. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.